Well, once again, happy Friday to you. We are so thrilled that you could join us here as we watch our ag commodity trade heading into the weekend. We had some interesting developments yesterday when President Trump, together with the Vice Premier of China, announced that they would be purchasing 5 million tons of U.S. soybeans. There was some confusion early on. Initially, some of the translations from the Chinese team, it was translated that they would buy 5 million tons of soybeans a day. Well, that turned out to be inaccurate because of translation issues. But they were buying 5 million tons, supposedly in the near term. May not be all at one time, and it may be scattered out a little bit. We don't know the time frame yet. But that did support the soybean trade today. The corn market also traded higher today. In fact, all the grains have been trading higher on the rebound from a lower day yesterday. Let's take a closer look. On the corn market right now, you have the March contract up 3 at 379.5, and we have July up 3 1/4. New crop December up 3 1/4 at 403 1/4. And the soybeans that I was talking about, we are maintaining gains, even though we're well off the earlier highs this morning. March now trading at 924 1/4. That's up 9 cents. July up 8 1/2 at 950 1/2. And in the wheat trade, we noticed around, I'd say 10 o'clock Central Time today, the wheat market really started firming up. And now we have March wheat in Chicago 8 higher at 524 1/2. Only 2 ticks off the high of the day, really starting to increase in its upward momentum here. And it's led higher by the nearbys. What about Kansas City wheat? On the March contract, now check this out, 9 3/4 higher at 508 3/4. That's a full dime off of its earlier low this morning of 498 1/2. Well, here to talk about it, we have Scott Gecas on the line now, direct from Chicago. He's at the edge of the trading floor. He's with Prosper Trading Academy. And Scott, I wondered if you had any information on what caused that abrupt change in the wheat momentum here about, I'd say about an hour ago.
Right. As far as the wheat goes, what we've been looking at is just the rumors coming out of Russia. Their exports are going to be slowing a little bit. Maybe some restrictions are back on the table. Either way, either one of those are bullish catalysts, especially when you have Egypt as well as Japan continuing to buy U.S. wheat. So that is giving a little bit firmer tone in the wheat market in general. But what I want to note is I think it's a perfect example of yesterday. So what the traders are looking for just in all across the board is how big of an effect these headlines are going to be coming out of the U.S.-China trade war talk. So yesterday we had that big pullback, and then today when everything started, the dust started to settle, now we're starting to get a little bit of firmer tone. But when they moved hard and they moved fast. So that's the train wreck that people are trying to avoid, and that's a good way to be able to protect what you already have by using the options.
Would you agree that there has been a lot of pent-up buying demand in the market just because the money has been sitting on the sidelines for like 3 or 4 months now?
Yeah, and that's the biggest thing. So with all the money sitting on the sidelines, there's really not that much as far as liquidity being pushed around left and right. So if we have a negative tone, then we're going to see a big pull, and it's going to be exacerbated just because there's not that much money out there. Now, vice versa, if you see biggest pulls catalyst, you're going to see a spike up without, another higher than expected move higher just because the liquidity is not there. All the funds are just sitting on the sidelines waiting for some type of clear direction which way to go.
And as we pointed out earlier in the broadcast, in case our viewers missed it, we were talking about the CFTC reporting of the Commitment of Traders report, and we're not getting that data, and it's going to take a while to get caught up on that once again. So even if the funds are changing positions here this week and their overall outlook on the grains, we won't know for probably a couple of weeks, and that could be a big market factor. So we'll have to keep close tabs on that if possible. Scott, we'll come back here in a moment, and I'll get your thought on the cattle trade and the hog markets. We're seeing some turnaround activity there, both directions, and we'll talk about that in a moment. Scott Gecas is at the edge of the trading floor in Chicago. He joins us now. He's with Prosper Trading Academy. And looking at the livestock trade, we talked about it earlier this week, Scott, about the Arctic weather outbreak that impacted much of the upper Midwest. And, of course, that includes a lot of the Northeast, big metro areas, high population areas. And, boy, there were a lot of restaurants that never did open up. What did that mean overall to the meat demand here?
Yeah, because of that whole polar vortex that came through, I mean, it pretty much shut down restaurants, not just the higher-end steak restaurants, but just random restaurants just across the board. All the flights were canceled. Restaurants were closed for days, not just Tuesday, not just Wednesday. I mean, they're just starting to open today. So that had a huge effect on that market. Now, you got to keep in mind, though, with the funds having that hefty long position in the cattle market, it still bounced right off of that 125 level. Now, the one thing I want to point out to you is, you know, earlier we were talking about the commitments of traders and that data not being released. Now, with the option markets, that's a very good inclination where you can see where the big money or the smart money or the funds that are either setting up or positioning by just with the open interest in the options. So that's one inclination that we definitely look for is when it comes to the option market.
Let's look at our current futures trade here, Scott, and we'll get everybody updated on the last trades. And again, I still haven't seen any cash cattle trade activity reported yet in the country, typically slow this time of year. Let's take a look at what's going on with live cattle first. We have February now 40 higher at 125.20. This has been a real yo-yo, jumpy affair here this last couple of days. We have the April now trading 15 higher. It's at 126.45 per hundredweight. June is up 42. On the feeder cattle side of things, we've been higher and lower and higher, and now we're kind of trading both sides here. March up a nickel at 142.60, but April down 25 at 144.05. All the deferreds are 22.50 lower. On the lean hog trade, we have the February currently trading 15 higher now at 56.40. April now unchanged at 60.23. It's been above and below $60. Technically, where does that put us here on the lean hog trade, Scott?
Yeah, with the lean hog trade, I mean, the chart is basic. On the technical side, the chart is broken. Your next spot for support is around 55, which isn't that too far away, but the traders just across the board, everyone I've been talking to just around the country, everyone's just still waiting to see if that China import campaign is going to even materialize. So that's why you've seen that break of 60 and that continuing downtrend to where we are at current levels.
All right, thanks, Scott. Great to talk with you again, and stay warm out there. Scott Gecas of Prosper Trading Academy. He's located there in Chicago.